Before we start, please subscribe for more updates. For months, Donald Trump has been trying to corner Canada. He threatened crippling tariffs. He demanded absolute loyalty. On stage, he said Canada wasn't paying its fair share to NATO and demanded they buy American weapons to prove their worth. He thought he could bully his way into a massive payday for U.S. defense contractors, but Mark Carney didn't blink. Instead of bending the knee, Canada's Prime Minister executed a ruthless financial maneuver. He took Trump's NATO demand, weaponized it, and created a sovereign Canadian war bank that locks the U.S. out. U.S. defense stocks shook. Washington scrambled. The global order shifted. I'm going to show you what changed, who panicked first, and how it hits your wallet and security. For years, America assumed Canada was the junior partner, buying U.S. jets and systems without question. Trump decided to test that assumption. He blasted Canada's defense budget and launched a campaign of public pressure. He assumed more spending meant more American missiles and radars, but he misjudged his opponent. Carney is a former central banker. He plays the long game. Canada unveiled a historic defense industrial strategy, a $729 billion injection over the next decade. On paper, Trump got more spending. In reality, Canada wrote the check to itself. The non-negotiable rule: build, partner, buy. Build at home first. Partner with European and Indo-Pacific allies next. Only as a last resort, buy from the United States. Billions that once flowed south are now ring-fenced for Canadian firms. Thousands of high-paying jobs, exports targeted to rise 50%. Then came the Arctic Century move, making the high North Central to NATO. Canada invited Europe deeper into Arctic security, diversifying away from Washington. One screen roars, the other rewires the rules. Carney warned, middle powers must act together or be on the menu. His approval ratings surged back home. Trump escalated with threats of 100% tariffs. After Canada formed a strategic partnership with China, the rhetoric intensified. But Canada supplies critical inputs: aluminum, minerals, components. Under Build First rules, those inputs can be reserved for Canadian projects. That means delays and higher costs for U.S. systems. Markets reacted immediately. Allies took note. You don't need to bow. You need a better spreadsheet. Leadership built on strategy reshapes the field. Next, the receipts, the aftershocks, and 3 ways this plays out: override, escalation, or bypass. Here is exactly what just happened. The centerpiece is Canada's defense industrial strategy. It includes $180 billion in procurement and $290 billion in capital investments. Not just buying ships and jets, building industries to supply them for generations. Guiding principle: build, partner, buy. Canada joined EU-led initiatives like SAFE and Rearm Europe, favoring European co-production. Billions redirect away from American defense giants. A new defense investment agency acts like a sovereign war bank. It funds R&D, scales AI, and secures manufacturing at home. Stable capital and clear targets de-risk private investment. The U.S. and Canadian defense bases are deeply integrated. Canadian aluminum and strategic minerals are vital inputs. Specialized components and software link both sides. Prioritizing domestic contracts could mean U.S. delays and higher costs. Markets priced in political risk as U.S. defense stocks dipped. Japan, Australia, and the UK study the blueprint for autonomy. The Arctic focus underscores how the rules of the game are changing. Consequences for the U.S. could be significant. Companies may lose billions in expected contracts. This isn't just future risk. It can hit current operations. Cross-border frictions raise military production costs. Expect higher price tags from jets to ships. Consumers could feel it as supply chains strain. If tariffs and counter-tariffs escalate, the pain spreads. Retaliation could spill into agriculture, autos, and retail. Uncertainty hurts businesses and workers on both sides. Canada's pivot toward Europe signals alliance realignment. Power here is financial and legal, not performative. Procurement rules, public funds, and partnerships are the weapons. This is geoeconomics, a middle power asserting sovereignty. Ahead lie three scenarios. Scenario A, corporate override, lobby power secures carve-outs and quiet deals. Scenario B, ego escalation, steep tariffs, trade war, fractured alliance. Scenario C, Pentagon bypass, militaries cooperate while politics feud. Professionals insulate security from turmoil. Canada has chosen to spend more on Canadian strength and independence. The coming months will reveal which road is taken. The outcome will shape the economy, North American security, and the global balance. Is this quiet strength or a risky gamble? Drop your take and subscribe for the next update.